morning, everyone, and welcome to the European crossover webinar. And we'll just edit this out here. And we'd seen the euro come back yesterday with a very nice move, but we saw it take a tumble back in. We're just going to do a quick flyby of just some news. Obviously, what's impacting is we're getting all kinds of movement here. One of the things that came out this morning, good growth, and we'll just fly through this real quickly. The Eurozone business activity picked a bit, extended a bit from last month, a solid growth, but a global trade war kept optimism in check and suggests the pace may not be maintained, a survey showed. We did get a purchasing managers index come in at 54.5 from the 54.3. The trade war has had some effects. Policies have been implemented so far by the U.S. hitting the Eurozone are pretty small, but worries and protectionism escalating in the future could have an impact on business. Now, just to go over this real quickly, one of the reasons why the dollar was doing much better earlier this morning in European trading, the dollar rose broadly. Obviously, that's a different case right now. We're seeing the dollar pair back in at this moment. You can see that pulling back. But it says the dollar rose broadly on Wednesday as concerns grew that President Trump may soon ramp up a trade war with Beijing by imposing tariffs on more Chinese imports. We've been talking about that. The dollar index, which measures against a basket of currencies, was up 0.2 at 95.66, but we since pulled back down here to 95.40. And also references the talk with crisis in Turkey. Now, I don't want to spend too much time at all on the news, but I do want to hit some key points that we were looking at. We'll get to that. Strong German services points to robust growth in the third quarter. So we are seeing the euro come back. One of the reasons we're seeing the euro come back is now we have rolled into the December bunds, but you can see here, prices continue to move lower, obviously yields going higher, and that's certainly going to go and give a boost to the euro. I mentioned that to the guys and gals in the ForexAnalytix room earlier, saying, hey, look, new lows now in bunds, and obviously we're getting that extra kick here in the euro at this point. We've seen a run up to the 78% here on the rally back here in the euro. Looking here with the bunds, trying to hold those lows here at this price at the moment. But this says German services growth reached a 6-month high in August as firms created jobs at the fastest pace in 11 years, as the survey showed on Wednesday, suggesting the domestically driven upswing will continue into the third quarter. So good German news. Separately, the Construction Association's ZDP on Wednesday raised its forecast for revenue growth in 2018, pointing to surging demand for real estate, higher state spending on construction, and lower borrowing costs. This is all supportive for the euro, and certainly we're seeing the euro bounce back. Now, the only thing is that we are getting a bit of mixed information or mixed data in here. We'll take a quick look here. As we come into the States, the one we do have Canadian trade balance data, but obviously the key is going to be Bank of Canada rate decision coming in at 10 a.m. Eastern. Let's go on and get into the analysis. Like I said, once we get into a good groove as to hitting all the key variables, try and factor in daily charts, and move this out of the way. And the short-term analysis, once we get all that in a groove, we'll be able to measure things out appropriately. We'll take a look at the bias chart. Yesterday's bias chart support for the euro, we had a 15.34, the low was 15.30. And in the Asian session, let's take a look here. We actually came in, that's where our bias chart support was right here at the 38%. In the Asian session, we got up as high as, well, right here, 1608.5, and our bias chart resistance was at 1607. So pretty good, not bad at all. But like I said, let's go and take a look at what's happening with the euro. Once we came back from the holiday, we're kind of all over the place right now with this euro. And bit of a mixed bag in here. Now we've seen us defend on these pullbacks in here and hold into this 1532 or 1530-ish area right there. That held up. We didn't make new lows. We're coming back, but obviously a little area right here in the daily. This 1605 is key for them to get a close above 1605 on the daily to go and get this and stop the bleeding here at 1605. So that's going to be the key on the daily close at this point, 1605 to on a very short-term basis, just to quell this downside. So let's go in and mark this off for 1605 on a daily close. That's going to be key. If we can get a daily close above this. We'll just jump right into the analysis quickly. Let's go and take a look here with the 2-hour chart. Now we're just kind of like all over the place right now as we come back from holiday, and markets are trying to figure out which way they really want to go here. Now you can see here we made it right up to the 38%, and we got turned down. Saw a pretty good sell-off this morning. We've also had some Italian news. They're indicating that they're going to go on and respect the budget and try and keep things in line. That's giving a little bit of a bid to the euro. Also, we've also, as we mentioned here, seen these lower prices here on the bunds, that they've been under pressure. We take a look at it. We actually had to come here to a 2-hour to get a little bit closer look, but when we look at it on a 15-minute, they're still under pressure, but the key area is going to be 59.98 on the bunds. But they're trying to place a hold right there. Let's go on once again. Let's move right here into the euro. A lot of back and forth, and right now the market is still what we consider, at least on a very short-term basis, pretty much in a range here. When we look here for the support, that support did hold well. That was 1532, I believe, or 1534 was on. We got as low as 1530. Now we're looking for key support today. It's going to be this close on a 2-hour bar. We get below that, this is going to open the door for further downside momentum. You can see that's right there, 1556. That's going to be our support here. You could break below this. I think once you get past this area here, that would open the door for more downside. But it's important that they defend this 1556 right here on the 2-hour close. So we're actually going to kick up our support. We obviously were lower this morning, and we talked about this as a previous key day area for us to hold, which we did. They tested that, so we're going to come back here. That's going to be our support for today here on the intraday basis on the euro. But this market, I'll tell you what, the way it's trading intraday, it just feels like it just doesn't have a real good sense of footing here at this point. We're just up and down like a yo-yo at this point. It looks like at this, I'll give you an example here. I'll move this into a 15-minute chart. You can see here when they did come up here to 1608, you can see that here. I had that marked off, but I've got several things across on this 15-minute chart. But the key thing is, look how we come back from yesterday. We get this strong rally, and then we turn around and give it practically almost all the way back. And then we turn around and rally almost all the way back up here, although we're starting to shed just a little bit. But my point is that this appears as if there's no real sense of conviction, let me put it to you that way, or the trading's light. One of the things that Pibsar would like to say, used to say, is that when they come back from holiday, quite often the first week, there's a lot of meetings, and then the trading really starts to get some real traction and some real volume, probably like the week after. And I think this market's trying to figure out what it wants to do if it's not moving up and then moving down. Obviously, when we get these concerns with trade issues and the concern that the administration may levy another $200 billion on Chinese goods, tariffs on Chinese goods, we're just back and forth all over the place right now. So unless you're short-term trading, boy, you're at the mercy of this market right now. I don't think we're going to see the full effects of where this market really wants to go to until we start, going towards the end of the week. And this is evidence of that, is that we fell down here pretty hard, then we turn around and come back, then we fall almost all the way back down again, and then we come right back. So no real conviction. One of the things that is moving this market, I believe, is obviously going to be the bunds. So you need to go and keep that on your dashboard, at least what the price is on the bunds. Now on the upside, well, let's take a look here. We had that 1608 as our resistance. This market could maybe trigger some stops, and you got to be careful. This is the one area that if you're trading, I'd be very leery of either selling on a breakout or buying on a dip unless you catch it right near a key critical high or low. But as far as breaking the new lows, that's what you're going to have to be worried about. As far as resistance for today comes in, this is still a key area, this 1608. But can we push beyond that? I think that there's a possibility if bunds make a push to that 59.98, and you look right here, there's 60.13 on the December bunds. We've rolled into the December bunds. I think that there's a chance if we do, your key resistance is going to come in right there at 16. Let's go and move this. This is actually going to be the reactionary point. 1637, that's your key resistance right there. 1637, it's here. That's going to be the real resistance for today. And we can go up there and goose some stops, but it's going to be where the road meets the road is going to be 1637. If we get beyond that, then we'll get some traction. So resistance now moves up to 37. And don't forget, if we can get a daily close above 1605, that'll quell this downside momentum. But we would need a daily close above 1605. Moving on, let's go on and get on to cable. That's had its woes too, as it's succumbed to the action that we've seen here with, going back and forth with the dollar. Looked like we were going to come out of the woods, and we did have that area right there. We had our support at 2809 yesterday. I think the low was 2812. We've taken that out, and now we've reclaimed it at this point. So when we look here for support, it's going to be right there in this level, right there, the same level, 2809. Nothing's changed. You can actually move this a little bit lower right here, and we're looking at the 2-hour chart of defending this close right there, which is 2796, right there, 2796 and a half. Think of that basically at this point almost like your pivot. If you get below that 2797, then that really opens the door for them to go much lower. I know that right now the talk has been that the concerns with this crash out of Brexit, that there's still a lot of pricing that could go south on this market. We did see that Merkel's allies that came across the headline this morning that they're in favor of the stronger ties with Britain, and that's probably going to go on and provide some support. But for right now, we're going to go and list this support as 2797 right here. So move this here. And you can see where that's coming from, right there, 2797. You get past that, and that's really going to turn things south. And looking on the upside, on the cable, did make it up to this 2872 area here. It actually almost like a little bit of a double top here. I saw this yesterday on a very short-term basis. You can see right there that 2871. This one they ran out of gas. I thought it was just going to be a positive. We may work higher, but obviously the dollar had its strength going in here into the European session. We saw this cable come under some pressure. That being said, the news we're seeing out of Germany, just one moment. with their talk that they want to be supportive of stronger ties with the cable, may on a short-term basis give us a little bit of support here, and we're certainly seeing this with almost looks like a little bit of a hammer bottom. So for those that are aggressive, you can see this level coming right in here. 28, there's 28.10 again. Anywhere between 14 and 10, you look for the market to be probably well defended for those that are going to be looking for the bullish side here. Now, resistance is just has to be right there, 28.69. If we can get past that, then we'll go on and turn things around, I think. But it's going to take a 2-hour close above 28.70 to get things moving back up here. So let's saw here. Obviously still very bearish. And I think that this week, at least these first couple of days back, are going to be a little bit tricky to go on and trade. I saw one of the guys mentioning, you know, it's been fatiguing having to fight this dollar. And I tell you what, it's just all over the place. By the time you think it's going to look like it's going to, you know, roll over, it goes and reasserts itself. But once again, we're a slave to the headlines for right now. Let's go and move into the Aussie. Once we get established in the show, we'll be able to spend more time, whether it's on the daily analysis or we may bypass a couple of markets. One of them could be, you know, maybe crude, so we can spend a little bit more time on our daily analysis here in the hour that we have. Let's go and take a look here with the Aussie. Now, the Aussie dipped to new lows just a little while ago. We actually had made a run here in the Asian session. Looked like we might even get up here. I thought we might even be able to push it up in here to 38%. We were making a push. I think we had some resistance around 30, I mentioned, and I thought they might even make it up here. But they quickly lost steam and made new lows once again on the angst with the issues with China. We had our support at 71.57 here. We're going to go on and keep that. We're going to keep it. Actually, it was 71.50. So, and the low, let's take a look here. Let's move this a little bit. No, that was our support for yesterday going into today. Because on our bias chart, it goes from the current day into the very next trading day. So we had 71.50, but you know, it's oversold. There's no doubt about that. But yeah, obviously, when you're looking at the momentum, certainly that's going to go on and point to make it easier for prices to just continue to slide. Nothing's really changed as far as the issue that goes on with China, and the Aussie dollar is traded as a prop more often than not as a liquid proxy for China. Now, looking as far as resistance, well, we had 72.40 from yesterday, but this market 72.41. But this market is probably going to have a little bit of a tough time trying to get beyond there. I think if you look in here, we're going to have to lower this just a bit. This is going to be the key area right here. Now, we'd have to get above 72.23. Once again, the same thing with the cable, or in the sense the euro, as far as to quell the downside. So we need a 2-hour close above 72.23. We're going to go and list that and lower this as our resistance. And he moves back there. The market's probably going to go and step in front and challenge that. Let's go and move into the Kiwi now. Euro's starting to slide back just a little bit after trying to make a punch to 116. And unlike the Aussie, the Kiwi's cousin or sister, however you want to go and look at it, same thing, just new lows here. We got 65.30. I think on here we marked this down here. Oh, we put 65.25. Okay, 65.25. We'll keep the 65.25. That was our support. Look, we were actually looking, to go as low as 65 cents. I thought, well, that's probably maybe not necessarily exaggerating it, but probably a little bit of a stretch. I don't know if the market would drop 50 cents or 50 ticks. So that's 50 pips, I should say. So that's why we went 65.25. It played into that, but we'll stay with the 65.25. On the upside, let's move this here. Still a little bit lower there. We're going right here with the technicals. You can see that coming right across. $66.35. We got to get above $66.35 to quell this downside. Same thing, because the momentum is just continues to go lower, and we've made new lows. So if we made new lows, if we're able to go in and reclaim $66.35 on a 2-hour close, that will get people to go and start to think about, well, you know what? Now I need to go and cover on any dips back. So we've got $66.35. That's going to go in and remain the same. We'll go and move into the dollar CAD. Big news today, Bank of Canada rate decision. Let's take a look here. We already talked about this as we had broken this trend line. One of the things that we discussed is the market would start to look for any dips to go in and buy. Well, we're pushing even higher, much higher. I thought that initially we'd get up to, well, we come up to this 32.06. We'll take a look at this on a little bit longer basis. I generally don't look at 2-hour charts. 4-hour charts. So I like to focus more on the 2-hour charts. But to give us a little bit of perspective, we'll go on and pull this up and take a view quickly on the 4-hour chart. And you can see this zone here, right here. You can see how this market came down, almost coming down to 32.06 for support, rallied back up off that, tested, got a little bit of a rally, about 200 pips, and then turns around. And once they get past it, it was just down, down, down she goes. And now we're back up to this area here. So it's going to take a little bit to get us beyond this 32.06. You can see this being a very key area. Now, resistance. Well, if the Bank of Canada were to be a bit soft or dovish in the rhetoric, certainly we could go on and take a push. That resistance is going to come in right there at 32.44. Don't necessarily see that, but you never know. So 32.44 would be our bias chart resistance in light of this potential Bank of Canada rate decision, in case we do see some action. Certainly we're saying it's bullish now. Support now? Well, we're just going to go right here with the levels. There's support right there. 31.23. Now look, if the Bank of Canada were to raise hikes, raise rates, we might just go through this like a knife through butter, and that key would be 30.87. But on a short-term basis, that area is going to be bounced. But we're actually going to look right there, just below that, 31.15. It's right here. Right there. That'll allow them to goose a few stops past this area, but that 31.15, that'll be an area would work essentially like a magnet. Would also be above this breakout, and the risk would be back down to this 30.87. So not too far away. 31.15 for support. And let's take a look here with the dollar Swissy. This is a key area, and we almost made it up there. I think we had that marked off as 97.75. We sure did. And key area, You know, as I told you before, is this used to be, I used to be able to look at this as a leader for the dollar, and it certainly is the one that uh, showed the dollar out of the woods. But as I mentioned before, is for the last 3 months, the dollar switch has pretty much done its own thing. So we did get a rally back, but even on the run back here, as the dollar strengthened, it hasn't given us any indication, even from yesterday. So resistance is going to still stay the same, 97.75. No changes there, and we're trading in a fairly tight band. Support, really no change there. It's going to be 97.10, 97.11. You see right there. No changes right here on the dollar Swiss. And we'll move into the cash dollar index. Now this is interesting. Now yesterday we had our bias chart resistance. That was down. Oh, we haven't got to the dollar yen. Well, we'll touch the dollar yen quickly. We talked about the significance here in the dollar yen of 11.36. We had resistance at 11.44. It's all about the daily close. If we get a daily close here above 11.36, because that'll open the door once again back to the upside. Nothing has changed. 11.36, and we're just not even that far away. We're only 20 pips above it. We've been back and forth here, and someone was mentioning, boy, this thing is a hard one to trade and hard to figure out what this thing wants to do. But we did get that daily close above 11.36. See right here, and keeping the upside. If we're to go and push higher, and once again, we've got a mixed bag with the dollar. The key resistance is going to be 12.11. That would be the get. Now, can we punch up higher? We can punch up towards 11.95. They may run out of gas, but the key resistance, if we move, if the dollar makes another extended move, really this dollar yen is trading on its own, doing its own thing. We'll take a look here on the 2-hour, but on a daily, it really opens the door for the 12.11. Now, looking here on the 2-hour chart, 11.66, you can see has been the key pivot. Above it, things start moving higher if we get a sustained close, and the same thing on the downside. On a short-term basis, this is it, but we have to really be realistic as if this dollar yen breaks higher, what are they going to? It's going to be 12.11. It's way above the market to a certain extent, but it's going to be that key area here. So let's update this for a little bit longer view on that 12.11. Certainly, he's got the upside momentum after getting a close above 11.36. But once again, this is where the market want to go and target. If we hit stops, this is eventually where they want to go to, is 12.11. On the downside, we're going to go and keep it the same as we were already right here at 10.87. Right there. No changes here, 10.87. And for right now, we're just in a range here with the dollar yen. We're going to move in now to the Dixie cash dollar index. This one has been very interesting. Support that we had here, we had 95.28. This is actually where the market pretty much stopped. When you look at it, I've talked about this before. Let's back. $95.28 a key breakout area. That's a key breakout area on the daily, which got the market, going. And we actually went to that area in Asia, and we turned around and flipped right back off of that 95.28. I'll show that to you here. The significance of that 95.28. You see, that's exactly where they went to. That was our support. Well, this key we had as resistance, but the support meant for it to hold on a daily right there. And then we were at 28, and that's right where we went to 28. And then and this was in Asia, and then the market turned around and just started going straight up. Now we've turned around and given a decent part of that back. But you can see the significance of that 95.28. 95.28 was that breakout area which opened the door for eventually move all the way up to 96.99. Let me move this out of the way. So where are we going here with the cash dollar index? This one has been tricky. We made it up here. Here was our resistance here yesterday. Remember, 95.71. We had that set up as our resistance. The market made it up. I think they make it up to 95.75. We slid back, held that 95.28. There's that purple line. That purple line designates where our key close is, and you can see that actually held the market basically to the tick. In this case, we've turned around and rebounded. Now we had a nice little, depending on how you look at it, a nice little, I wouldn't call that a shooting star, but it's maybe a little bit high for a gravestone doji, but essentially that was it. And the market rolled over and spent most of the day in the late US session, early Asian session, just going south before turning around and ramping right back up. And now here we are with another more in tune gravestone doji, certainly open the door for a little bit downside momentum. What happens here? That's what I'm saying. It's a bit of a mixed bag right now. That 95.50 is a pretty key level, but in order for right now for this market to get bullish now, we really would have to get above 95.58 on a 2-hour close. We're not even that far away, but if we can get above 95.58, that'll probably that would at this point open up the door to test some upside stops. How far that would take us to, whether we can make it up here, my thought would be is this would be the intraday trigger right here. You get above 95.58 on a 2-hour close, I don't think people are going to stand in the way. I don't think they're going to rush to the door to buy as many dollars, but I think they'll be covering their dollar positions. Once again, a 2-hour close above 95.58. So let's go and mark this off. That 28's key. And let's come back here. Well, we're trading, as I said before, in a very tight range. Let's go on and pick this up here. There's your resistance. Support around the downside if the dollar index decides it wants to go and break. And certainly it looks like it's getting tired up here. And then it could, and when it does break, if it does break, probably pretty good move down here we'd be looking at. We can actually put a fib here. If that would be the case, let's go and take a look at it. Probably a little bit early to do that, but if we break, what would be some targets we'd be looking at if this dollar index starts to fold over? For starters, down here in the lower 95s. Anybody that's bullish at dollar, you know, that looks like we're going to break out, we'll slide back. Okay, now everything's back on keel again. Now we start to slide back again. My thinking is, once again, 95.58 is going to work as a pivot on a 2-hour close. So any moves back here, anyone that's bearish the dollar is going to use these opportunities to go in and sell against that. And if they're wrong, the risk isn't too much. So I think the dollar have a little bit of a tough time. I think we're going to have to generate some kind of big headline or something to really get this to push higher. I think the market is set up, or to a certain extent, the market is very long dollars position-wise, according to the CFTC. So the longer we hang around here, if we don't get some traction to the upside, you may start to see some of those bulls wane a bit. And so I don't think anything's going to happen immediately, but we may just hang around here for the next day or so. And if we can't get any upside momentum, then we may start to go on slide. That's, I think, the way you have to go and take a look at it. I think it's a little bit tough right now as traders come back from holiday to step in and they're ready to start taking those positions. I think this market, people are saying, you know, let me think about it. Let me see what's really going on here with the dollar and how is it going to go and react. I mean, we certainly saw last week the dollar work higher when the thought was, okay, administration is going to, you know, lock on or snap on an extra $200 tariffs on Chinese goods. The market kind of came back from holiday, kind of forgetting about that, and all of a sudden today now it's back on the front burner. What we might see is once again a jump up here on some headline and then turn around and slide back down. But this will be the key pivot for today, 95.58 on the downside. The support then, I think this market is going to play these ranges Support would be right there, 95.05. That's going to be our support. I think if we break lower, people won't get in the way of it. They'll let it go. 95.28, remember, that's key. That was at daily level. So it's going to be right here, 95.05. If we get some momentum beyond this 28, then I don't think they're going to stop at 16. They'll make the move for 05. Now let's move on to gold. Well, this also worked out pretty well here. We talked about 1194 being key on a daily close. That's why we had the asterisks and the 1195 and pretty much held in there. There was a stretch that it could have got down to 92, but this pretty much just caught the lows right there. So when I look at the gold, I will say this about the gold. It's, even though it broke early yesterday, it's actually holding up fairly well against the dollar. The moves, gyrations you're seeing in the dollar. Gold's trading in a very tight range to a certain extent, although I'm looking on a very, very short-term basis. Seems to be consolidating running here. Now, if we see some kind of headline-generated news, that may allow a dip down here, maybe to even take out the 91. But I think that you're going to find some good buying as we would come down here. Now, that being said, where's the support? We have to go. I think we have to go and allow for that and give it some room, because you don't want to be caught with your pants down. If we do get, the dollar makes one last push on a headline, so we're going to actually give it a little bit more room than we did yesterday. Yesterday, the 95, 94 worked out very well, practically right there where the market ran out of gas. But we're going to give it a little bit more room in case we start to see this market rotate a little bit lower, and then it's the victim of a headline, and that could very well take place. So we're going to actually move this a little bit lower, and we have 91.60. We're actually going to go with 11.91 on the downside, so you know your risk is. I tell you what, we'll keep that 94 there, because that would be key, because if we made that move down here, you'd want to, on a daily close, have it recapture 11.94. That way, if you were to pick it up, let's say we saw that and you picked it up and the market was moving higher off of those lows, let's say the dollar fades on the headline news, begins to fade back after rallying, and you're along the gold market, let's say 11.92, 11.93, and you see that for the daily close, it closes like at 11.96, then you know you're going to have some upside, a little bit of a tailwind or undertone bid. But that will be key, but I want to make this so we don't be caught with our pants down for 11.91, and just be cautious. Now, looking on the upside, we had the 12.04. We're going to go in and adjust this lower here also. And the resistance is going to be right there. Well, that's not much, but it's going to be 12.03. It's going to move this down to 12.03. And there's a support 11.903, 11.91. There we go. And once again, like I said, I think that we can stretch down here. And the good thing, I mean, I wouldn't say the good thing, but 11.91, it could slide all the way to 88, but I think this whole area between 88 and 91, 92, you're going to see some hands step in and be willing to go and pick up the gold at this point. We saw new lower levels here in the spider, but the market's not reacting to the downside anymore on that news. It's starting to lose its effect, which means to me is that even though the market's under pressure, it's not continuing to break down. So overall, we're holding up fairly well here. We could be breaking a lot lower, and this is going to be the key. That's what I'm saying, this 91. I think that's going to be very key. We could make a stab below it, but the key would be to close above that area on a 2 hour, and if you can get daily close And then once again, we're just factoring in case we see this dip in gold. At least you're ready for something like that and make a determination how you want to go on and trade that. Let's go and move into the bonds. Well, the bonds did get past this pivot. So we're seeing higher interest rates, and you would think that this would be supportive for the dollar. And to a certain extent, it is. Problem is that we're seeing the bonds lower. Now we've rolled over into the December, so it looks like we have this big old gap, but that's the gap between, pull this back, between the September and December bonds. But pulling this back, I'm looking here on a 2-hour. See if we can get this a little bit closer here. You can see this is the key area right here, 59.98. So the thinking would be if we do go in and break here down to 59.98, that's going to continue to be supportive of the euro. But if we can make a hold here, let's say the euro rallies up, let's say 30, 40 pips, probably an area where you probably see the euro maybe take a little bit of a pause, a breather. But you definitely want to keep your eyes fixed here on the bonds to give you a general idea of how far or where the direction will lead with the euro. I mean, as I said, I mentioned to the guys and gals in the chat room, hey, new lows in the bonds, and the euro was much lower and obviously provided a nice undertone bid for the euro. But we've already had pretty decent fall here in the bonds. I would look, we may not see it today, but any moves just below 160, we've got support at 59.98 is going to be key. We'll actually mark that, although we're looking at the bonds right now. Right there is going to be key for the bonds. They actually held that yesterday, which is this 42.28. They got that, looks like they dipped about one tick below that. That's going to be key for right now. And you can see even here, right there, it's all 42.28. So we're just going to lower this, not too far away, but 42.28. And apologies, I made it 44.28. Broke that pivot at 44.07. Support now, 43.28. Bonds coming off their lows right now. And the upside is down here. Well, certainly the 44.07 is having some trouble with that pivot, but that's not the resistance. Look, we can go above the pivot, and there'll be some more right in here. If you look here, 44.16, but the real resistance is going to come in there. It's a ways away, but it's going to come in there just right there, which is actually, we'll call it 44.31. But you can see here, now the bonds, I always look at them on a 4-hour chart, but you can see the significance of this pivot, that 44.07. Moving into the bonds, as we just mentioned, we have rolled into the December bonds. Support, as I mentioned before, is going to be 59.98. That would be resistance. It's a long ways off, but the bulls can certainly come back. That would be resistance. Seems like a long ways off, but they are very oversold. They come back and they're going to snap back in a heartbeat. That would be resistance right here on the bones, 60.36. One thing bullish about the bonds is if you look at rates, the rates of it itself, that would be the bullish part. Going in here to the SPOOs, let's go and save this. We had the 28.94 and it actually even got below that. Actually made it all the way down to 28.85 3/4. I was thinking yesterday, it almost feels like, but not quite, almost like a little bit of a rounded top, but maybe trying to see a pattern when there really isn't a pattern. Resistance actually is going to be right there. You have to wonder at some point where the concerns with China began to weigh. So far, they haven't, but you can see this level coming right there. Comes in 28.98, coming right across. Make the case for a little bit higher 99, but I would go with right there, 28.98. For right now, it's going to be right there, 28.82. Which would coincide with the 23% back. I mean, well, actually, if you adjust it over here to these new highs. But it's going to be still 28.82. We're going to move into the NASDAQ. You can see the resistance coming in right there, which is 76.36. Almost similar to the way that the S&P is set up. Called 76.37. Support right there. $75.74. This support here on the NASDAQ worked out very well, but I think the thing which you have to have your heads up on is at some point where we start to, we've had an unbelievable, expected to fall far, let's say in the S&Ps or the NASDAQ, but you want to start to see where momentum starts to change and the concern that we may have with what's happening with China. Where we see that kind of reaction, I think the market is waiting for something like that. Where we see a good move, and it doesn't mean the market will cross completely apart, but we see a pretty good reaction. You can start to see that right here where the market fell apart. And then before you knew it, then you saw the momentum really catch up. Not that we're expecting this market to turn on for it, but I think that that's what you have to go and focus on is that news right there. Now let's go and move into the DAX. Which has really come under quite some pressure. Now I think we had our resistance right here, or I should say support, the 149, went right through that. Obviously concerns once again, just if it's not issues with, I think I saw where Ivan the K was remarking on something what Jim Cramer said about the Eurozone hangover. And if it's not Italy, it's the concerns with Eurozone banks because of the Turkish crisis or issues ongoing with the administration, with trade issues. When it looked like Europe was kind of let off the hook about a month ago, things have kind of changed a little bit since then. So obviously, certainly we're weighing on the DAX. Now, I will mention this is that we saw some great German growth numbers. So probably a little bit stretched here, and we're at a very key level here at 12,105 with the DAX. We're in support right now. Coming right there, 12,117. But we have certainly seen, we've been under some kind of pressure here. But that would be the support here, on a short-term basis, 12,117. We do have a little bit of a hammer bottom. The 23% comes in at 12,197. And that would actually allow this punch into this little gap. And it wouldn't be that far away from where it had that 78% on the way back down. Obviously, initially it held and then turned around, the wheels fell off the caboose. I like that area there, that 12,197, because the pressure still remains there. And we'll find ourselves with a little bit more extra time. We're going to go here now into crude oil. We certainly saw a pretty good little slide in crude. There was a lot of concerns about what might happen. This level worked out very, very well here with the crude, but we had the support very, very close, and certainly it kept on falling back. How far back? We'll take a look at the fib right now. See if we can establish some confluence. Well, right here, we'll find some support here at the 38%. So we come in right there, just below that, which is going to be 68.54. 68.54, right there. Those are traded crude. Once it gets some momentum, Don't get in the way. Right there, 69.60. Which would be just take out those highs, 69.60. And there's the bias chart for today. We see this run back up here in the euro. Now we're easing back just a little bit. Well, guess what? We're easing back a little bit. Well, because you're seeing this rally back up here in the bunds. The bunds had actually made new lows. And at the time, when we're making these new lows, we got all the way down here, what, to about 68.08, 60.08. Look, we rallied 14 ticks. That's actually taken a little bit of a upside pressure off of the euro, but not a whole lot. I think that, once again, I think the jury's still out. And I think you have to be careful here. When the way we've we've faded back in the dollar, if we saw a nice run, look like, okay, now we're going to start to work lower. This was all overdone. We turn around and come all the way right, almost all the way right back. Certainly just about did it here in the euro on the way down. And now we're kind of easing back. I think this market is going to be on a very short-term basis, just kind of going back and forth. We're seeing a little bit of this Jekyll and Hyde action right here. We rally, then we lose it. Hold that 95.28. We rallied almost all the way back. Now we start to lose it again. This market is kind of like not as unsure what it wants to do at this point. And I think because of that, it's very susceptible to some stops. And so I think that if you get a headline on the administration in regards to this China chip business, you can quickly gun some stops. So if you're going to go and trade with I would think with very tight stops. And I would think that you probably want to wait at least over the next 24 to 48 hours to assess where we're going to start to see some momentum. Because you're not really seeing here when you run up, you turn and give it up, you run back up, now you start to slide back down again. I think it's made it a little bit tough. I think you're going to have to come in at key levels. Right now with the cable, it's going to be this 27.96, 27.97. Any breaks below that really will open the door for the downside. Been some talk over the weekend that the downside isn't really priced in. Well, we did get some news from Merkel's allies stating they want to have strong ties with Britain. So that's going to provide at least a little bit of a undertone bid for right now. We also, technically, we have a little bit of a, almost looks like a hammer right here on this 2-hour chart. So I think they'll try and step in and defend this or hold it. Once again, we get beyond 27.97, it'll certainly open up the door for us to go lower here. And looking here with the euro, as I said, the key resistance where the rubber meets the road is going to be the 1637. We need to get a 2-hour close above 1637. Until then, we're just kind of at the mercy of these headlines that go just back and forth. Whether the headlines come out of Italy with their issues with the budget or issues with the administration and tariffs. Once again, like I said, I think we're susceptible to this headline risk. The real key news of today is going to be the Bank of Canada rate decision. We did break above this trend line. So really, technically speaking, any moves back down towards this 30.87 are certainly going to be defended, even if we see they take action and we see the Canadian dollar strengthen. This would still be an area where if people were playing from the short side, they'd certainly step in and try and cover on a very quick basis and then reload. We'll see, but that's going to be the key news for today. But here's the bias chart once again. Dale should be coming up any second. And thanks for joining us here on the Morning Edge webinar.